Pratik Agrawal joins us. He's Chief Investment Officer with ASK Investment Managers. Pratik, good morning. Thank you for joining us. Pratik, before we get into specifics like telecom and two-wheelers, first outline the big picture for us. We've seen a sizable and a durable trading bounce in last 2 or 3 days. Do you think it's going to sustain? Do you think we have a trading bottom in place, or it's too early to assume that we've troughed out?
Well, we do believe that a bounce is in order, because the sharp downtick that we saw was primarily on account of the fact that both domestic mutual funds and FIIs turned sellers at the same time, and we had this problem of NSEL also hitting the market simultaneously. Since then, what has happened is on the domestic mutual fund side, redemptions, we understand, have reduced considerably, if not stopped, and FIIs have also turned buyers. So, clearly some bounce back is clearly in order, plus also the fact that valuations in a big part of the market really became very, very compelling. However, we believe that markets may continue to be choppy and weak, mainly because going forward, the next quarterly numbers, if one starts to focus on that, would not be good again. This quarter was probably the worst in many years. While it may be as per expectations and slightly better than expectations, our senses on an aggregate basis, we would have a quarter with zero kind of a growth. Going forward, next quarter can be worse. If you go by the way IIP has behaved over the last 2 months, and now even the services PMI is negative, it kind of implies that the next quarter would be worse looking versus this quarter, and hence to say that market would stabilize at current levels would not be in order.
Pratik, hi, morning. How have you read into Tata Steel's performance, and after the run-up that we've seen in the stock in the last 2 days, what's expected today?
No, so, while it's easy to focus on the profit and loss, and there the company may have done very well, my sense is we should look at the cash flows, and an easy way of looking at cash flows is to look at the net debt figure for these companies. So, if the net debt figure has increased, which I believe has happened, then it kind of means that the business has not thrown up any net free cash flow. So, maybe on account of depressed valuation, a bounce was in order, but very difficult to say that it would sustain.
Pratik, so far it's the financials and banks which have led the decline. Do you think the next leg of downturn for Indian markets, whenever it will come, will not be led by banks?
No, frankly, we are not very positive on banks anymore. Now let us work on a ratio. For a unit of profit that a bank makes going forward, we believe the stock price compounding would be less than the profit increase. Simply because the ROEs of the space are expected to fall and sharply going forward as tougher Basel III norms hit the banking space. Apart from this, the near-term issues in terms of corporate lending are not receding, they are increasing. Till yesterday, if the concern was only, infrastructure space and power, going forward, the concern is spreading to a larger part of the economy. And, if this slowdown persists, and to our mind, it would persist, and one should be prepared for that, corporate lenders would face increasing difficulties going forward. So our sense is banking is a space which will continue to see significant amount of pressure.
Pratik, on the other hand, there are names like Infosys which have been, sort of clocking fresh 52-week highs. You think the tilt is going to remain in favor of the IT names?
No, it is where you have hope versus where you have zero hope. So, if you look at that, then, you want export-oriented businesses. If they have pricing power, the better. So, you talked about IT. One should add pharmaceuticals to that pack. One would want to be with businesses focused on the agri space, so seed, pesticide kind of companies, two-wheelers, etc. And maybe retail-oriented lending institutions. So most of them would actually be NBFCs rather than banks, and maybe one or two large private sector banks. So that is the investment universe at this point in time. Rest of the part of the economy seems to be slowing down, stalling very, very badly, and it kind of does not make sense to be positioned in that part except to play for a bounce. So stuff like Siemens, Vale, etc. may have cracked just too much over the past few months, and one can expect a bounce. So that kind of a trade apart. In terms of numbers, one should expect continued not so good numbers in the future as well.
Pratik, any specific reason why telecom is back on the radar for a lot of investors? Suddenly telecom stocks, they are gaining more, they are falling less. Idea and Bharti, they both have been marked outperformers. Do you think telecom is now the new defensive?
Well, telecom in terms of this result season had a standout quarter in terms of profit increases. So clearly stock prices are reflective of the quarterly numbers. However, we continue to be slightly skeptical of telecom story, even if pricing power has returned to telecom in some measure. It's still some time before the businesses start to generate any meaningful amount of ROCE, return on capital employed. It is sub 10% for the whole of the space. It needs to be at least 12 to 13% at the minimum if retail investor has to actually make any money from the business. We really believe that the businesses as of now are being valued way over what the fundamentals should warrant.
Pratik, would it be fair to assume that perhaps Ranbaxy has bottomed out post its earnings, at least in the near term?
No, can't talk too much stock specific, but yes, this is a stock in a space, beaten down stock in a space which is the focus as of now, has been the focus for last 2 years, and it is finding some renewed attention. Maybe the bad news is all in the past. It won't be hit by bad news in future. To our mind, maybe the US business is also showing signs of stabilization.
Pratik, some of the realty names have been really running up hard. I mean, consecutively we see some stocks. Yesterday it was the turn of DLF, Oberoi Realty looked very good. Is it just a technical bounce because the market is beginning to pick up after cracking below 5,500, or do you think there's more meat to it?
Okay, so in real estate one should look at the sectors, bifurcate the sector into two set of companies, one which may be great, large, etc., but have so much of debt on books that frankly I don't see a way out. They have so much of land on their books that they can't sell it all. India as a country can't absorb that kind of build up in any meaningful period for these guys to be able to reduce debt. So those kind of companies may have a bounce when people get optimistic, but if till debt starts to reduce in a meaningful manner, frankly we don't see any sense in the business. Then there are real estate businesses who have land capability and are actually net cash on books. So one should be focused onto those businesses for sure. I think why that part of the market cracked down is a mystery to me. One should not paint whole of the real estate with the same brush. Third, there are real estate companies where a large part of the parcel has an SEZ in it. If you look at the news flow of the last few months, the government has been typically trying to improve the attractiveness of SEZ as a business versus earlier. So SEZs can be now put to multiple use. Part of all the end usage norms for SEZs have been tweaked to make them more attractive for builders. So I think there has been some amount of fundamental change for this space that has happened, and that is reflecting in the stock prices. But my thing would be to focus on unlevered real estate companies where stock prices may have been flashed down unnecessarily to extremely low levels.
Pratik, the government and Reserve Bank of India has taken some hard, bold and impressive measures to stabilize the rupee. But rupee is not responding. Globally also the outlook for emerging market currencies is not bad. So why has rupee failed to recover?
If you look at currencies of emerging markets, they are also weakening. Dollar has been strengthening, so it's in order. I think what the central bank is saying is that they cannot set a level for the currency. They would want the currency to set its own level, but in an orderly fashion. So our sense is it will or it should continue to weaken. There is hardly any improvement in numbers. One can feel happy about the current account deficit being closer to 12 billion versus a 20 billion kind of a number, but clearly 20 billion was unsustainable. In terms of measures, there is more that can be done. I really don't know why we should continue to focus only on gold and silver. To my mind, consumer electronics is a segment that really needs focus. It's non-productive to start with. If you go by the thinking of the 90s, non-productive, consumption-oriented imports were taxed at a significantly higher rate. I think that should again be the order of the day now. So we need to see some bit more on restricting imports rather than because that is what will deliver immediate results versus trying to improve exports. We have done a bit on improving exports as well. Government giving a SOP of 1% to exporters, but that's a slow, steady process. We have to start focusing on imports in a much greater fashion. And gold, frankly, is just one item. It's an easy pick. And maybe it's already gamed. If you look at the amount of imports that have happened in gold before the measures took place, it tells its own story.